Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, markets set to pull back from recent records. Futures are pointing to a lower open as investors wait to hear from a slew of Fed officials this week, starting with newly minted Fed Governor Stephen Miron this afternoon. The bigger market moves this morning are in gold and crypto, though. Investors are seeking safety. Gold prices again hitting an all-time high. Bitcoin, though, coming under some pressure. Plus, big tech scrambling in the face of a new immigration policy from the White House. President Trump sparking confusion after signing an executive order adding a $100,000 fee for all H-1B visas, which is relied on heavily by America's largest tech companies. At the time of the announcement, it wasn't clear which visas it would apply to and whether it was an annual fee. But the administration has since said it only applies to new visas and the fee needs to be paid only once. Also, Oracle announcing a C-suite reshuffle. The software giant announcing two executives will replace CEO Safra Catz. Catz has led the company since 2014. She'll transition to the role of executive vice chair of the board. Clay Magouyrk and Mike Sicilia will take on the roles of co-CEOs. Magouyrk has been with the company 11 years and most recently held the role of president of Oracle Cloud Infrastructure. Sicilia was most recently president of Oracle Industries, where his experience included the field of applied artificial intelligence, according to the company. Let's get check in on stock futures here. As I mentioned, we are seeing things pull back a little bit from the record highs where we were last week. The Dow right now indicating about a 0.5% decline at the open. The S&P a decline of about 1/3%, as is the NASDAQ. So let's dig into our top stories of the day, figure what's going on here. Futures pulling back to start the week after closing at fresh records Friday. And it's a big week of economic data on deck. The Fed's preferred inflation gauge, for example, due out on Friday. Plus, President Trump imposing a $100,000 fee on H-1B visas. Joining me now, senior reporter Brooke DePalma live at the NASDAQ, Federal Reserve correspondent Jennifer Schonberger, and Morning Brief Market Sunrise host Ramzan Karmali. And I'm going to start with big tech here and that change at the top of Oracle, Ramzan, which feeds into the AI trade. Obviously, Oracle has sort of come roaring back as one of the centers of that trade. And Safra Catz, one of the most powerful women in tech, now moving into a different role.
Indeed. In fact, it's interesting that Oracle have named insiders actually to head the company. As you say, Clay Magouyrk and Mike Sicilia are, both come from within Oracle, and we've seen, Safra Catz being appointed executive vice chair of the board instead. Now, shares of the company were down initially in pre-market trading, but you've got to remember the shares over the past year are up over 80%. Now, Clay Magouyrk, he joined Oracle back in 2014 from Amazon Web Services, and he was previously president of the Oracle Cloud Infrastructure division. Mike Sicilia, he was formerly president of Oracle's Industries unit, and he had joined Oracle through Oracle's acquisition of Primavera Systems. Now, Oracle's founder, Larry Ellison, has been Oracle, and more importantly, their founder, Larry Ellison, has been in the news a lot recently. In fact, his name was mentioned at the weekend by President Trump as part of a group of people that could take over the US arm of TikTok. And earlier this month, Ellison actually became the world's richest man, although pretty briefly, and that's after Oracle issued that dramatic cloud growth projections that they think they're going to have over the next 5 years. But I think it's fair to say with this appointment, the two appointments, that Oracle's really betting quite big on the future of its cloud infrastructure business. It's worth noting also that it's booked big deals recently too with the likes of OpenAI and Meta not so long ago. So a really big move for Oracle at the top of the company.
A big move indeed. And if we zoom out and look at what's going on in large cap technology, we have that news company specific, but then we also have the H-1B visa news, which we have to talk about in the context of tech companies because they're the main user of these types of visas.
Yeah, all the major tech companies, also foreign governments as well, they're rushing to respond after Trump, late on Friday announced that plan to impose a $100,000 fee on the H-1B visa, and it could, upend the program that underpins America's tech workforce. Let's be clear, the sector is highly dependent on Indian and also Chinese workers. In fact, over 70% of the H-1B visas go to Indian workers. So it's not a shocker, actually, that Indian tech firms took a bit of a hit in trading today. The sector gauge in Mumbai fell around 3%, its worst day in around 5 months. Roughly $10 billion in market value was wiped away. The likes of Infosys, Tata Consultancy Services and Tech Mahindra were the biggest drags on the index there. Now, these Indian firms get a lot of revenue from the US. So overall exports are estimated to be worth around $280 billion a year. So obviously this is going to make a big difference to them. But remember, this all comes when ties between India and the US, well, let's be honest, they're not pretty good at the moment. They're pretty strained right now. Remember Trump he put a 50% tariff on India back in August because he's not happy that India continues to buy Russian oil. There were some signs that tension was easing, though, because last week trade talks began again between the US and India, and Trump actually called Prime Minister Narendra Modi on his birthday to wish him many happy returns. So you thought that tensions might be easing, but that clearly isn't the case. But one interesting thing is the tech firms here in the US, I say over there in the US, sorry, you think they'd suffer in the pre-market, but the likes you can see there, Apple, Microsoft, Amazon, Meta, Tesla, not doing too badly in pre-market. In fact, you can see there, Tesla up over 1%. So they're taking this maybe more in their stride than, say, the Indian tech firms did earlier.
Right, and I think I saw this morning that Amazon is the single largest user of H-1Bs, and even it is only down about a third of 1%. Right. Zooming out and looking at stocks overall, obviously big cap tech has been really the large power behind the rally that we've been seeing, and we are coming down from those highs a little bit this morning, Brooke, even as still more people are getting bullish.
That's right, Julie. We saw one of the biggest weeks for inflows since December. That's according to Bank of America last week after the S&P 500 and the Dow hit a record high at Friday's close. Now we're seeing a bit of pullback in early innings this morning, but yet we are hearing some more bullish calls on the street, including Goldman Sachs. That firm raised their S&P year-end target to 6,800. That's up from a previous target of 6,600. Now, the firm there cited the Federal Reserve expected to cut interest rates. They're pricing in 2 more quarter-point cuts coming this year. They also cited strong expectations when it comes to corporate earnings. Of course, we've seen major swings when companies beat Wall Street's expectations, especially over the summer, and they are waiting to see that momentum continue. It's worth noting that right now the S&P 500 is sitting around 66, 64, and so this would be an increase to year end. It's also worth noting that they really do join a multitude of other firms that we've seen raise their year-end price targets as of late. That includes Wells Fargo's, Barclays, Deutsche Bank, which all have raised their price targets as of late for the S&P 500. They also citing resilient earnings, that AI investment cycle, as you had noted, and also the expectation that the Fed will continue to ease in these coming meetings. And this is really a step back, a stark difference from what we heard back in April around that Liberation Day when Trump enacted those tariffs. We saw many firms cut their year-end S&P target. But now, as we see this momentum continue within the market, we are seeing that return to higher year-end targets across multiple firms.
Jennifer, let's also talk about the other thing that the market's going to be watching very closely this week, a couple of speeches and a bunch of economic data. Let's talk about, I guess, Stephen Miron, because that's coming first. He'll be speaking at noon today at the Economic Club of New York.
That's right, Julie. Stephen Miron, the newly minted Fed governor, is set to give his first major speech as a Fed governor at the Economic Club of New York at 12 noon, where he will lay out an in-depth look at his outlook for the economy and monetary policy. This coming after he said in a pair of interviews on Friday that he was in favor of a 50 basis point rate cut, a jumbo rate cut at the Fed's last meeting last week, because he doesn't see any inflation from tariffs. And he thinks that the benchmark policy rate is actually too restrictive. He'd like to see it closer to neutral, which is a level that neither spurs nor hurts economic growth, because that could potentially threaten the labor market. So that speech coming today. We'll also hear from Fed Chair Jay Powell himself tomorrow when he speaks in Rhode Island about the economic outlook. This is going to be his first speech since the Fed cut rates for the first time last week. Remember, they've penciled in 2 more rate cuts for the rest of this year, which the market is expecting. However, the Fed chair was very quick to point out during his press conference last week that the Fed is very much data dependent, and they are going to be taking this meeting by meeting, that those interest rate projections are not a forecast. And at the end of this week, we're going to get some critical data. The core PCE, personal consumption expenditures index, which is the Fed's preferred inflation gauge, that expected to clock in around that sticky 3% level. So holding that level that we've seen over the past couple of months, both on this measure and the consumer price index. If it comes in a little bit softer, I think that probably paves the way for the Fed to move forward. But the real data point that's going to be the determination, I think, is going to be the jobs report due out on October 3rd.
Yeah, got to wait a little bit longer for that one. And then the other speech that really is going to be in focus this week is going to be President Trump addressing the United Nations tomorrow.
That's right. President Trump heads to New York this evening ahead of his first speech during his second term as president at the UN General Assembly tomorrow morning. And this coming against the backdrop of several countries, including the UK, Canada, Australia, and France, who are recognizing Palestine as a state. The president is reportedly going to meet with select Arab leaders tomorrow afternoon after his speech to talk about creating peace in the Middle East in terms of the Gaza war. Israel, of course, has sent a clear message saying that if you recognize Palestine, you are essentially endorsing terrorism. All this coming ahead of Israeli Prime Minister Bibi Netanyahu's visit to the White House next Monday, September 29th. The White House has not briefed us yet on what exactly the president will address the UN, so we remain in suspense over that. But certainly that is the backdrop there.
Yes, indeed it is. Thanks so much, Brooke. Jennifer Ramzan, appreciate it. Coming up on Morning Brief, we'll bring you today's top trending tickers as we count down to the opening bell. Don't go anywhere. Now time for some of today's trending tickers that we are watching. First up, we've got Oracle, the software giant, announcing 2 executives will replace CEO Safra Catz. Catz has led the company since 2014. She's going to transition to the role of executive vice chair of the board. Clay Magouyrk and Mike Sicilia will take on the roles of co-CEOs. Magouyrk has been with the company for 11 years. He most recently held the role of president of Oracle Cloud Infrastructure. Cecilia was most recently president of Oracle Industries, where his experience included the field of applied artificial intelligence. Those shares little change this morning. Obviously, they've been on a big run this year as they have been benefiting more from the demand for AI. Next up, Pfizer, the healthcare giant, agreed to buy obesity startup Metsera for $4.9 billion. The drug maker will pay Metsera $47.50 in cash per share and further payments of up to $22.50 per share if certain milestones are met. Metsera, one of several next-generation hopefuls in obesity, it's developing a handful of experimental weight loss drugs. One of its products includes a shot that could be taken less often than Wegovy or Zepbound. And finally, Kenvue, shares of the Tylenol maker slumping on reports the Trump administration plans to link the active ingredient in Tylenol to autism and to make that announcement as soon as today. The Washington Post reports that officials plan to warn pregnant women against using the medication unless they have a fever. Earlier this month, the Wall Street Journal reported that HHS Secretary RFK Jr. was planning to link Tylenol to autism. Shares of Kenvue down 14% this year and down another 4.2% this morning. As always, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. The stocks are pulling back to start the week after notching new record highs on Friday. Still, September is defying its reputation so far as a historically weak month for stocks, and many Wall Street strategists say there's still room to run. Joining me now, Thomas Hayes, Great Hill Capital Chairman and Managing Member, here with us in the studio. Tom, it's good to see you.
Great to be here, Julie.
So let's talk macro for a moment, and this little bit of a pause here this morning, but we've had this big upsurge.
Yeah.
Anything? You've been pretty bullish.
I have been bullish, and that's worked. But I do think we could be due for a pause. There's an old Wall Street maxim. You've been around, sell Rosh Hashanah, buy Yom Kippur.
Right.
And more than 2/3 of the time, this last week and a half of September tends to be a weak time. On average, down about 0.4% in the S&P 500, 0.5% in the Dow Jones Industrial. I think that's the bad news, Julie. So maybe a little short-term volatility.
Yeah.
The good news, you got so many tailwinds. Number one, you got consumer sentiment completely washed out at levels not seen since the COVID lows, and prior to that, the European debt crisis in 2011 and the great financial crisis in 2008. What happened 12 months later when consumer sentiment was this low and washed out? S&P was up 24.1%. The other thing you have, as we know now, is the tailwinds of the Fed cuts. And if right now, market's expecting 4 to 5 cuts over the next 12 months. In an expansion, if we don't go into recession, we're showing no signs of immediate recession. GDP is still positive. You have up 16.1% over the next 12 months. And then you got earnings accelerating. So estimates for next year, 13.7% earnings growth, up from $300 a share to $305 a share. So I think the theme is going to be pick your spots, because maybe the indices don't do quite as well prospectively as they've done in the rearview mirror the last few months, but under the surface, some tremendous opportunity.
Okay, where's the spot?
Okay, well, first thing, we've got a 4 times in a 100-year opportunity in small caps. Small caps valuation relative to large caps has only been this low. This will be the 4th time in 100 years.
Okay.
Last time was the early 2000s. Over the next 6 years, you had dramatic outperformance. Fed cuts are a huge catalyst for this because they can refinance their debt. They have faster earnings growth relative to the S&P. They have a lower multiple relative to the S&P. So I know a lot of value guys and girls have been calling for small caps for
really? I haven't noticed, Tom. I don't know what you're talking about.
But for all of our technicians out there,
Yes.
they're actually starting to break out. Not that the fundamentalists really care, but it's a good sign. They are starting to break out, and now we finally have that Fed.
Okay, I'm going to ask you the same thing I asked one of your peers on the street who was also talking about small caps last week. I just, for fun, went back and looked at the relative performance of small caps versus large caps.
Yes.
10-year period, 20-year period, 30-year period, 40-year period.
Yeah.
Guess what outperformed at all of those periods of time? Large caps. So is it small caps over large caps, or is it just? I mean, it's not like you're selling your large caps.
No.
You know what I mean?
It's cyclical. If you look at small cap value over the last 40 years, dramatic outperformance over large cap. It depends on the start period and the end period, particularly if you look at when periods get flushed out like this.
And I guess the sub part of small cap as well is important.
Profitable. Yeah, profitable dramatically outperforms unprofitable, and you have solvency risk obviously in some of that index. But if we look prospectively, earnings growth expected to be something like 35% next year relative to the S&P at 13.7. S&P trades at 22.5 times forward, which is a little bit stretched. Small caps, 18, 17, 18.
So would you buy, for example, the S&P small cap 600 over the Russell because it tends to be more profitable, or would you zero in on small cap value specifically? Like, how are you thinking about it?
Yeah, I would be focused here just because of where we are with the easing cycle. I'd be actually skewed towards value because that's where you're going to get the cyclical upturn of the acceleration that's driven by refinancing and the earnings power. The other thing is energy, by the way. You can't give away energy right now. If you believe in data centers, this is the covert AI play. You've got that sector is trading at the lowest multiple in the S&P 500, 15.2 times. It's going to have the second highest earnings growth next year at 17.7% earnings growth. So you can't,
even if oil prices remain suppressed.
Just on demand, okay. There is a case we're moving into the seasonal period where energy starts to outperform in the fourth quarter. So I think you've got to have a little. You haven't had the weight in the S&P this low in energy since the COVID lows when energy turned negative. It's only 3% of the S&P. Every time you've bought that, I mean, we were buying ExxonMobil hand over fist at $33 when oil turned negative in 2020. We see some selective opportunities in energy just like that. That doesn't preclude tech being great, consumer discretionary, but it's like, when these things, generational opportunities are served up, you got to pay attention.
Okay, and so in our last 30 seconds, an individual one of those, Jerry Jones is linked to this one, which you gotta love.
Comstock Resources, look, full transparency, we built a position at $8 and $9 a share. It went to $28. Now it's at $16. New money coming in from clients. We are putting new money to work at these levels.
So what
Why?
makes yes.
Okay. 1.1 million acres in the Haynesville, Bossian formations. This is Louisiana and Texas. It's near the export facilities. It's near the liquefaction facilities. The demand for exporting LNG is going to go up with the trade deals with Europe. The demand in the data center, a lot of data centers are being built in those areas. You're going to have 165% growth in data centers by 2030, according to Goldman Sachs. 60% of that power is going to come from natural gas. Right. They are the lowest cost producer. And Jerry Jones is a master. He was an oil and gas wildcatter. That's what gave him the money to buy the Cowboys. He's got 75%. He says his interest in natural gas is greater than his interest in the Cowboys.
Wow.
And so Comstock Resources is trading at $5.7 billion market cap. That's PV. That's its book value. PV10 reserves. They've got 30 years of drilling rights, which means this could be a $45 stock over the next few years.
All right, I got to look at the Cowboys' odds this season, but something tells me it's not as good as you think the odds are for that one.
That's
all right, thanks a lot, Tom. Good to see you.
Thank you.
Coming up on Yahoo Finance opening bid, our executive editor, Brian Sazzi's joining us now. Saz, what's coming up on the show? You got Jerry Jones?
Julie, I know you're a big football fan. I'm excited to hear if you're bullish on Dallas Cowboys, and I wonder if Tom's taking new clients. I got millions that he should be managing for me. Really excited to talk about the CEO switch at T-Mobile. Mike Sievert, longtime CEO, is handing the baton. We talked to Sievert and the incoming new CEO. And of course, Julie, we're going to weigh in on that handshake between Elon Musk and President Trump. What does it mean for Tesla shareholders? Maybe nothing, maybe something.
We'll find out. All right, thanks, Saz. Appreciate it. I'm going to go put on a game. That does it for Morning Brief. Much more ahead on Yahoo Finance.